Good morning and welcome to this weekly market update. Today is the 12th of April. For any new followers, basically what I'll be doing is going through price action, technical analysis, the main forex pairs. So today I'll be going through euro dollar, cable, dollar yen, Aussie dollar, US dollar, and I'll have a look at gold and I'll have a look at silver because I haven't looked at silver in a few weeks. As it's a Thursday because we had the bank holiday this week, I normally give a kind of weekly outlook for the rest of the week, but as there's only a couple of days, I'll try and go into a bit more detail over what will be happening the next couple of days, because I mean the last few days there hasn't been a lot of data out anyway, so these next couple of days are much more interesting in my opinion. Okay, so let's have a little look at the weekly. Also, one more thing, we have 3 moving averages on each of these charts. The red one is a 55 simple, the 100, the purple one is 100 simple, and the gold is a 200 simple moving average. Okay, so what do we have on this euro dollar weekly chart? First of all, let's have a little look at last week's weekly candle, and also I'll draw this recent fib move which we've been speaking about for the last few weeks now. So as you can see, last week's candle was quite a bearish candle, but we did say in last week's video that after 3 consecutive weekly gains, the odds are for some sort of retracement. I mean, it could have kept on going up, but the likelihood is that we'll get some sort of retracement, and we did get a retracement, but surprise, surprise, it came down and it pierced below this 50% Fibonacci retracement level, and it's popped back up and it made a weekly close above. As you can see, previously we had 1, 2, 3, 4 previous weeks where the candle was pierced below the 50% and popped back up and closed above. So this level still remains very, very key, and this one spot 30.55 level. And as you can see already this week, it's pierced below this level and it's popped back up. So very, very interesting price action in that weekly. I mean, the odds for this week is that it's going to go to the upside, because as you can see, the candle close, it opened above this level. We've had a retracement, so the odds are that it would pop into the upside, and we're already kind of getting that already this week. Not a massive pop to the upside, but I would expect some kind of further gains really. But in terms of the week, in terms of any resistance zone, all I really have any interest of is this one spot 34.85, which is the previous highest, the 0% on the fib. And if we get above that, then it's the 100 week moving average. In terms of the daily, it's the same sort of fib move really, but you can see price is struggling to get above this 100-day moving average, so that's the key resistance zone that you want to have a look out for on your charts. In terms of the daily, if we get a pop above that, then we've got the 55-day moving average to deal with as well. But yeah, you have to say the odds are to the upside really. Another thing in terms of the daily is that we're kind of getting a kind of triangle action here, so you can see draw a line there and we draw a line there, so it's kind of in between this sort of zone, but it looks like we're bouncing off this nicely. So I mean, you would expect it to come around the top of this triangle. Someone let me draw it, is it? Bear me 2 seconds. So you would expect price to come up around here and test this top side of this triangle. But as I say, it's got to get above this 100-day. It's been holding very, very nicely, this moving average. You can see around here it acted as a you can see it acted around here as previous support. And it's now acting as resistance here, so key level to look out for on the daily. But you have to say the odds are still to the upside if we can get a break, but if we can't get a break, then I reckon it'll come down and test this kind of support. But there's a nice sort of support confluence here, so if we get a sell-off maybe today, then you have to say that this should hold really. But very, very interesting week in terms of price action on the euro. It's been playing out very nicely, that fib level. Very, very key level to have on your charts. Okay, let's have a little look at cable now. In terms of cable, what do we have with this lovely trend line support we've spoken about for months now? I we have the top level as well. So it's been going nicely inside this triangle formation. In terms of fibs, if we zoom in, we've spoken about this before. This fib is still in play. We had a lovely reaction off that 50% level there, and the odds are to come up to this 123.6 extension. But you can see we have two kind of moving averages here on the weekly. We have the 55-week moving average and the 200-week moving average. That's capping, but you can see around here on this lovely support off the 100-week moving average. It's been holding very, very nicely there. And you can see last week's candle, it was a retracement candle, but you can see it's bounced off this level very, very nicely, and it's done exactly the same this week. I mean, this week's candle is pretty much a hammer candle, already forming, so be interesting to see how this candle closes. But you have to say, in terms of the odds are still to the upside really on cable, very, very bullish. But in terms of the weekly, it's all about these two moving averages here around the 1.5973 level. In terms of the daily, what do we have on the daily? Still the same fib I'm going to keep up. Actually no, I'll change, I'll delete this fib and move it to the next fib. So you can now see we have a new fib set up in play, which is this one here. You see it's reacting nicely around the 50% level there and the 55-day moving average. And you've also got the 200-day moving average below it as well, so you've got a nice sort of area of support there, quite a few sort of support levels. But you can see the previous sort of few days wicks, there is quite a few upper wicks there, but it is making high highs. So you have to say it's still moved to the upside, but it's kind of slowly grinding up there. But in terms of resistance, all I'm really interested in is this previous high here at the 1.6062 level. But yeah, very nice action, especially on that weekly. Very, very nice action. You can see that clear much. You can see that Fibonacci level much clearer there. You can see there's 3 wicks pierced it, and you also got the bounce off the 100-week moving average. So very, very bullish price action there. Very, very technical indeed. In terms of dollar yen, what we've been speaking about for these last few weeks was this 100-week moving average. I'll just highlight this for you. See, it's reacted very, very nicely, but we did get a weekly close last week, so the odds will be for some sort of sell-off. I mean, it's been very due some sort of retracement. It's a much healthier retracement really, and I'll be looking for bounce off of this 50% at around the 80.09 level. I would expect buyers to be coming in at that level, because that would be a nice sort of healthy retracement. I mean, let's say it does, if it comes down further, we may get buyers off this 55-week moving average, which coincides with this 61.8% retracement level. So that's a key. It'd be very interesting to see if we do get a further sell-off, what will happen around this area here. I definitely expect buyers to come in at that level there. That will be a much healthier retracement, but it should get a strong bounce if we get down to that level. In terms of the daily, I'm still going to leave the same Fibonacci retracement setup from the weekly. You can see we're getting some buyers coming out this 55-day moving average already, but it's not looking that strong. I mean, that candle there wasn't a reversal candle. But as you can see, we have another moving average at this 61.8. This is the 100-day moving average this time. So be very, very interesting to see what happens at this 61.8 if we get down there. But if we do, I would expect a lot of buyers to come in, because you can see with that 100-day there moving average and the 55-week moving average, both that 61.8% retracement. So that'd be a key level if we get there. In terms of the Aussie weekly, what do we have? We haven't looked at Aussie for a while, but I thought I'd show it today, because just purely for the fact we haven't had it in a while. In terms of the weekly, this what's this recent fib setup? You can see it's reacting nicely already off the 50% retracement. Last week's candle it pierced it, and we spiked back above and we made a weekly close, but it is looking quite heavy. And you've got the 55-week moving average capping there. But you can see already this week we've had a pierce below this 50%, and it's bouncing up nicely. So if the weekly candle closes like that, then I would definitely expect next week's price action to be bullish. In terms of the daily, we'll leave the same fib up really because it's acting very nicely. But you can see we're already kind of testing this 200-day, and we have the 100-day moving average here, so that'll be the first kind of key resistance at that 1.0407 level. That'll be the main resistance. But it does look nice to the upside, but it needs to break these key couple of moving averages here and post some sort of daily close above that 100-day moving average to gather any sort of momentum. Okay, let's have that's done for the forex now. Let's have a look at the gold chart, everyone's favourite commodity. In terms of gold, we've spoken about numerous times now, but you have to have on your charts this lovely trendline support, which coincides with this 55-week moving average. I'll just move this down below a bit. As you can see, very sort of nice confluence zone. But last week we did have a weekly candlestick close below this trend line, so quite interesting. I mean, that's why I was moving around with the trend line, because a lot of people will be putting it there, so some people won't say it's a trend line break. If we move it to the daily, this way you can tidy it up a bit, and let's say, yeah, you can move it from the low on the daily, candlestick body low, and surprise surprise, that coincides pretty much with the spike. So I would not say this trend line has been broken. That's how I draw my trend line. It's always good to neaten up your trend lines down the time frames, I personally think. In terms of this fib setup that we've spoken about the previous sort of few times, it's not that crispy clear. I mean, really, we had a daily candlestick close below the 61.8, but it's come back above it now. But it does seem to be reacting quite nicely around this 50% level. It's come now that we've I'll zoom in a bit more. Now we've come around this level, above the level. We had a daily candlestick close above the 50%. It's now, these last couple of days it's spiked below this level and it's closed above. So this is now acting as a good sort of support, I'd say. So the odds for the next couple of days definitely will be to the upside, in my opinion. The first sort of target would be that 100-day moving average, which should act as resistance at 16.79. But it's still a lovely chart, gold, and as always, people are still buying it on the dips to continue this lovely sort of trend line. In terms of that weekly, yeah, the weeklies are much clearer in terms of that fib. You can see that candlestick, last week's candle closed, it pierced below the 61.8 and it closed above it. But it did close below that 155-week moving average, so a lot of people will be getting confused. But you have to say, in terms of the fib, it's still very to the bullish side, and people are still buying it on those dips. But in terms of the resistance this week, it would be that key 100-day moving average at 16.79. Let's have a little look at silver. So I haven't looked at it in a while. In terms of silver, you have to say it's still to the upside. You've got this lovely trend line here, which is still holding, but we are making significant lower lows here. So it's still ranging in kind of this triangle sort of area. In terms of the weekly, we're pretty much just in between the 55-week and the 100-week moving average. In terms of the recent fib swing, this recent low to high here, you can see it's hovering around that 50% level. But we did get a weekly close below that, but it's a nice sort of lower wick on that, and you can see it's just hovering around this area. I mean, the last sort of 4 weeks you could technically say have been ranging. In terms of the daily, is there any sort of more clear indication? No, there isn't really. I'll probably have this support up here instead of this fib, you know, just because it's just a much sort of clearer level, and it hasn't been respecting that fib level as well. But in terms of support, it's been holding very nicely. You can see 1, 2, 3, 4, 5 days it's kind of pierced below this level, this 31, you can say 31.30 really, this 31.30 level. Let me just type it on there for you. Yeah, this 31.30 level, and it's reacted nicely and it keeps on bouncing up. But we see we're getting capped around this 100-day moving average here, which stands at 32.06. You can see it's just in a very tight range, and if we're going to get any more momentum to the upside, then it's got to close above this 100 day moving average to get any momentum up to the 55-day, which will be the next resistance. But you have to say, in terms of the outlook for the next couple of days, you have to say it's towards the upside, but we need to get some sort of clear momentum and clear daily candlestick close above this 100-day moving average if we're going to get anything more to the upside. Okay, that's it all for the charts. Let's have a look at the Forex calendar and see what we've got coming up over these next couple of days. So the last few days we haven't really had any significant big news. But in terms of today, what else we've got? Eurozone industrial production. That's all. I mean, it's mid-impact news, but people do keep an eye out on it. In terms of, we have some big US data out at 1:30 with the US PPI numbers month-on-month forecast at 0.3%, previously 0.4%. We have the trade balance as well, and the weekly jobless claims, which will be looked at a bit more because we had the very weak non-farm numbers last Friday, kind of at half expectations. So, in terms of Friday, we have China GDP, very interesting number that, because it does have effect on kind of risk appetite. So euro dollar always gets affected on it because China has such a good relationship with the US, so you want to keep an eye out on that. We have some UK data at 9:30. We have the UK PPI input numbers forecast at 1.3% month on month, previous was 2.1, so we're expecting a decline in those PPI input numbers. And at 1:30 UK time, we have the US core CPI month on month forecast to increase at 0.2%, and previously was 0.1%. And at 2:55 we have US preliminary University of Michigan consumer sentiment forecast at 76.5, previously 76.2. And to finish the week off, we have everyone's favourite central bank chairman, and that's Fed Chairman Ben Bernanke, speaking at 6 p.m. UK time. So very interesting week in terms of the technicals. The technicals are playing out quite nicely. We have some big sort of news coming out in the next couple of days. So very interesting couple of days in terms of the Forex market. Okay, hope you enjoyed today's video. Feel free to comment under the YouTube video, and feel free to tweet us at our Twitter account here. It's at MRC_markets. If you have any questions, we'll also be posting up the regular sort of Forex news as well, and I'll post up some charts there as well. Okay, have a great week trading this week, and I'll catch you next week. Take care.